Good morning and welcome to NYSE TV Live. I'm Allison Kosick. The major averages hovered near the flat line during a quieter trading session Thursday as traders returned from the Christmas holiday. Investors dug through the latest weekly jobless claims data, although the number of claims from last week at 219,000 came in slightly below estimates. There were 1.91 million continuing claims for unemployment benefits. That marked a more than three-year high. All right, so here's what's on tap for the next hour. The so-called Santa Claus rally, which began with a roar on Tuesday with the S&P 500 climbing by more than 1%. It looked like it took a breather Thursday. The Dow was able to erase earlier losses to eke out a small gain and clinch a 5-day win streak. Let's talk more about what's happening with the markets. I want to bring in Jay Woods. He's the Chief Global Strategist at Freedom Capital Markets. And let's talk about what's in store for markets as we approach the end of 2024. And I know that before we talk about, well, I guess the end of 2024 also will be bleeding into 2025 because you're saying it's going to get a little rough.
It could get rough. Yes, we're in the midst of the Santa Claus rally, as you so astutely said at the beginning of the broadcast, which is the last 5 trading days of 2024, the first 2 of 2025. Historically, that's a very good time. The volume is very light. It's kind of slow when you look behind us on the floor. Not a lot of people here. But as we go into 2025, there are a few question marks. The rally has stalled a little bit, and that has me slightly concerned that we may stumble out of the gate. Doesn't mean we're going to, have a bad year, but given the fact that the market breadth, meaning advancers versus decliners, has been so in favor of the declining sectors, and we've been carried by some of the mega caps, I think we could see a mini correction, maybe even upwards of 8 to 10% as we kick off the first 6 to 8 weeks of the year, and then smooth sailing after that. That's what I hope.
So what is it that we're not going to see a Santa Claus rally then? I mean, we're going to be correcting 10%.
Well, 10% over 6 to 8 weeks, so Santa could come still by the technical definition. Yeah, we've had 2 back-to-back 25% plus years in the S&P 500. So we've been on a tremendous run, and during that time, on average, every 18 months, you get about a 10% correction. We haven't had one since October of 2023. Right now, the way we've stalled at this level, going into a lot of uncertainty. All right, we have a new administration coming in. We have tariffs about to be levied. Not sure the extent of that. The leadership has been great. It's those big cap stocks, but they're starting to tire, and under the surface, 8 of the 11 primary sectors, which are basically minus technology, have been struggling. So if they can't rotate into those sectors, we may struggle for the next few weeks. And then if we do, I think it sets us up for a good buy the dip opportunity.
So specifically, you're talking about the Mag 7. So how do you see that group performing into the new year or throughout the new year?
Yeah, I think technology is still going to be the story going forward, the AI story being front and center. We focus so much on the CapEx. How much are they spending in the technology to enhance it? Now we want to see results. We saw from one of our great companies down here, Salesforce.com, symbol CRM. That stock jumped after its last quarterly report based on what? AI, their implementation of AI. So to me, that's what we want to see, is a lot of these software-related stocks start to really come to the forefront. You see it with Salesforce, Oracle, Palo Alto Networks. That's where I think the strength is going to be in 2025.
Yeah, we have seen tech as really the second best performer in the S&P 500. Communications taking the top spot.
Yep.
What other sectors do you see taking the lead in 2025? And then what sectors in 2025 do you see actually taking a backseat?
Yeah, well, I think financials definitely are going to continue on this run we've seen. Last week, the banks were trying to sue to pull back some of their stress test regulations. But for me, the financial sector has been strong this year. And when the financial sector moves historically, you follow an ETF like the XLF. The XLF has been around for 25 years. 15 years it's been up, 10 years it's been down. So its track record is a little iffy. But when it's up over an average of 22%, 27% this year, maybe a little more. I think maybe 30. But it tends to go in groups. And then the part of the financial sector I liked, we're going to see M&A activity pick up. Look for the regional banks. We haven't seen the regional banks acquire other regional banks, in good times. We've seen some stressful times in the regional banking crisis, but I think the regional banking crisis, IPOs coming back to this place, will be very good for the financial industry overall.
Yeah, and let's talk more about the financials itself for 2025. Do you see them coming strong at the beginning of the year, knowing that you're predicting an 8 to 10% correction?
Yeah, I think what we're going to see is a little trepidation out of the gates, like I said, and we want to listen to those conference calls very closely. One of the things you're going to hear about is the strong dollar and Forex, foreign expenditures, and how the countries with multinational reaches, there's a lot of the consumer staples, how the strong dollar is affecting their bottom line. That's going to be an interesting storyline to watch. Tariffs, again, we don't know the implementation of it. And then Doge, Elon Musk and Ramaswamy, can't say his first, Vivek Ramaswamy, I can't say his first name. They're going to be cutting a lot of fat, if you will. That means jobs. And what kind of impact will that have? Because the Fed is watching two things, unemployment and inflation. And the two things that they want to kick off this administration with will have an impact on both of those things.
You know, when we did see the election come to pass, we now will have President Trump in office soon. There was a huge amount of exuberance in the market. We're seeing that fade, and he was elected based on his expected policies. And we're talking about the tariffs that you're mentioning and immigration. So now you're seeing it actually turn not in favor of the markets, or do you see that kind of filtering through as the year goes on?
Yeah, I still think we're in the hangover phase from that little rally we saw in the beginning of the election cycle. What happened was financials jumped. They're pulling back a little bit. The S&P 500 was up 4%. It's now up 3%. So overall, we're still above that level. That, as a technician, is a key level to watch, and I'm glad you brought it up. This 5850 level in the S&P 500 is where we gapped after Election Day. We got back down there on the last sell-off. We held, we've rallied. We haven't made a new high. I'm a little concerned about that, and I think we're going to retest that level and possibly breach it. And for technicians out there, geeks like myself, watch the 200-day moving average, which would give you an 8 to 10% correction around 55.50.
How concerned are you that inflation is going to remain really sticky throughout the year of 2025? And of course, you know, we are seeing the Fed, you know, throw more caution in.
Yeah, I think sticky, stubborn is another good word to talk when you mention inflation. To get us down to that 2% mandated goal that the Fed throws out there, I don't really know where they get these numbers from, but I think we're absorbing a new normal. I'm watching the 10-year closely because the yields have gone up 100 basis points since we cut 100 basis points. We are at 4.6% in the 10-year, 4.7 is the annual high. If we break out above that, then everyone's going to be talking about 5%, and that should have a negative impact on the markets. And if that happens, we're close to it now. When would it happen? In the next 6 to 8 weeks. So that kind of feeds my narrative that we could see, you know, a garden variety correction of 8 to 10%. Not the end of the world, but when you live through it, it's not fun. And then you wonder, how long is this going to last? Is this the real one, or is it just a correction in a very nice bull market we've had?
Yeah, we're going to bring you back a little bit later in the show, but your quick prediction for what you see the Fed doing as far as rates go.
Fed, they're going to pause. They're going to see what the administration policy, you know, does, how that will impact their policy going forward. But definitely a pause at the first meeting, and then we'll see what happens after that. Okay,
you're going to come back. We're going to dig in more about the Fed when you come back. Jay Woods, Chief Global Strategist at Freedom Capital Markets. Thanks for your time.
You got it.
Coming up, the National Association of Realtors issued its 2025 forecast earlier this month. Its chief economist tells us what potential homebuyers should anticipate. But first, the NYSE was home to some of the biggest IPOs of 2024, and we'll be spotlighting a few during today's show. That includes Viking, which listed here in the spring. Go ahead and check it out, and we'll be right back.
It's a big day for many of us.
In life, I'm reminded that it's not about the destination. It is truly about the journey.
Will not change. We will always obsess about our customers. It's about long-term value creation for the shareholder. Thank you very much, and good luck.
If someone came to us 5, 6, 7 years ago and said, can you produce a sugar-free or reduced sugar, low-fat or no-fat, plant-based, dairy-free, indulgent ice cream, we could not have done that. Today, we have the high-intensity natural sweetener to produce it with low to no sugar. We have the protein-based ingredients that are non-dairy that can replace the milk or the dairy. And we have the ingredients to help impart a very rich, creamy mouthfeel to make the product indulgent and also prevent ice crystal formation during freeze thawing. And so it's a capability that we've built that has made us much more relevant to more opportunities than we ever have had. The original stevia leaf extract products that came out, I'll call them the early generations, did though have, which is typical in early generation products, had a bitter or a licorice off taste associated with it. Since then, we've been able to develop through using natural stevia leaf extract, enzymatic conversions to isolate the best tasting stevia components. And honestly, they're really great tasting, clean tasting products that are still 300 times sweeter and give you that healthy opportunity to either reduce or completely eliminate sugar in a food product. And then we work from a texturizing standpoint to build back the mouthfeel that's lost when sugar is replaced. And we call that build back texture.
Welcome back to NYSE TV Live. I'm Allison Cossack. Earlier this month, the Fed signaled that we could see just 2 rate cuts in 2025 after previously indicating in September that 4 cuts were possible. In his press conference following the latest quarter point rate cut, Fed Chair Jerome Powell said that the expectation is that inflation will be higher in 2025. This resulted in the 10-year Treasury yield, often seen as a benchmark for mortgage rates, spiking. The 10-year yield ended the December 18th session above 4.5% for the first time in over 6 months. At the end of trading yesterday, it was even higher. It was sitting at close to 4.6%. Trinity Chavez recently spoke with Lawrence Yun. He's the chief economist and senior vice president of research at the National Association of Realtors. She spoke more in depth about how the housing market in 2025 and some of the hot housing regions across the country are going to be reacting. Check it out.
We looked at about 300 metro markets across the country, and it looks like the factors for more activity, more buying activity, more millennials able to get into the market, vast majority of the market. But we also wanted to identify who were the top 10 markets. And essentially, places like Hartford, Connecticut, Indianapolis, Kansas City. So what we are finding is that areas where we are seeing inventory growth, because lack of inventory has clearly hindered some of the first-time buyers, and also where the jobs gains are very robust, places like Phoenix, San Antonio. So we were looking at where the job growth, migration pattern, so various factors which we think will lead to a very upcharge activity in 2025.
And, as you said, the South and Midwest regions feature prominently in the top 10 housing hotspots. What factors contribute to their dominance, and how might other regions improve their housing market dynamics?
Places like Grand Rapids, it's been facing severe inventory shortage, even with the job growth, but it is still relatively affordable compared to rest of the country. So when you look at, market which is very pricey areas like the California market, activity can rise, but not to the extent because of the affordability challenges. But we were looking at where the millennials are moving into, where the job growth is strong, and where the income growth among the millennial population is rising strongly in places like Boston, and the increase in supply that is coming onto the market.
Now, I know you and your team are expecting mortgage rates to stabilize near 6% in 2025. How might this new normal, so to speak, impact buyers' confidence and overall market activity compared to previous years?
When we had that 3%, 4% mortgage rate back in the immediate years after the COVID, those were special, exceptionally low mortgage rates. Now that the consumers have adjusted, getting used to the fact that mortgage rates has been bouncing around at 7%, But with the Federal Reserve expected to cut more rate cuts throughout 2025, we think the mortgage rate will settle at 6%, which is slightly below long-term 50-year average. So as consumers see stabilizing mortgage rate and continuing job growth, definitely based on how the stock market has reacted post-election, it looks like business confidence is up. Business will invest more. Business will hire more people. So job growth, stable mortgage rate, rising inventory, these are all good factors to boost home sales in 2025.
But Lawrence, with the $410,000 on average median existing home price right now forecasted for 2025, what strategies can prospective home buyers employ to navigate affordability challenges in a competitive market, as you mentioned?
First, stay well within budget. So one do not, if one has more moderate income, one should not strive for that medium-priced home, but look for starter home, which is below the median, and it may require, say, looking at outlying regions. So rather than closer to the inner suburbs, maybe it's the exurbs which offer better affordability. And also look for the mortgage rate. Some people, younger people, they rarely stay in their home for 30 years. So maybe not the 30-year fixed rate mortgage, but adjustable rate mortgage, say a 7-year fix, and after that it adjusts. But people would then move within the 7-year time period, and adjustable rate mortgage, given that the Federal Reserve is cutting interest rate, will be more attractive.
But beyond affordability, what are the most pressing challenges right now the housing market may face in 2025?
Well, we have had this ongoing housing shortage. You look at the U.S. population, you look at the job growth, how many new units need to be there, and we estimate around 4 to 5 million housing unit shortage. It was in place even before COVID, but still ongoing, lingering, and therefore we need to boost supply. President Trump has implied that he may open up some slice of the federal land for more development, more housing construction, along with deregulation, which is bringing some optimism among home builders. But local city officials, they really need to look at how to boost supply. Boston has done very well in terms of trying to build more multifamily housing near the rail station so that, it has less environmental impact, but also where young people, they like to live in the downtown areas. So one has to look at all factors to boost supply. Supply has been the major constraint. Any policy to boost supply will be very helpful for the economy and for home buying possibilities.
And coming up, we're going to be zoning in on one NYSE listed company with more than 1,600 restaurants around the world. But first, Amer Sports, which owns athletic brands like Wilson and Arc'teryx. That company made plenty of noise when it IPO'd on the NYSE this past February. Here were some of the highlights. Take a look.
When you're a sports fan, you don't just notice the athlete, you notice the uniform. And that is why we are so excited to welcome Amer Sports to our community. You outfit some of the greats. You are truly elevating the world through sports.
It's my pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange. I want to extend my deep thanks and congratulations to all of you. Your dedication and hard work as a team show that we are better together. Together, we have an exciting future ahead. So let's continue our journey by staying true to who we are, working as one team, aiming for excellence.
Gina, welcome to Floor Talk. It's great to have you on the show.
Thank you. Thank you for having me, Judy.
So, Gina, tell me, how has Bath & Body Works' focus on fragrance driven its success and customer loyalty for the past 30 years?
It's been an incredible, incredible brand, and I'm so honored, actually, to be leading it for the last 2 years. This is actually my second-year anniversary, and the source of it has been just this incredible fragrance-forward positioning, and if you haven't checked lately, fragrance is on trend for some time now. And we put fragrance in 12 to 13 forms. And what that means is we can have these beautiful candles, and that can be winter candy apple, which, by the way, is celebrating its 25th anniversary today. So to your point about 3 decades of performance, but we can also put that in a foaming hand soap. We can put it in a pocket back hand sanitizer. We can put it in a fine fragrance mist. And while that seems simple, it is actually quite a feat to put a fragrance across all those different forms, and customers love it. They want to smell head to toe with fragrance. So it's a wonderful differentiated business model.
Head to toe and home.
True, right?
So now you recently released your Q3 earnings. What were some of the highlights?
We were really pleased with our third quarter. We beat expectations on the top and bottom line. We saw store traffic and conversion be positive and exceeding the benchmarks that we also track, which was great to see. We also had every major category grow. So that for us, that is body care, that is home fragrance, and that's soaps and sanitizers. So all growing. We had some great newness as well. We're known for our innovation and our newness. We did a collab. The one that we have out right now is Emily in Paris, which is great.
Welcome back to NYSE TV Live. I'm Allison Kosick. Earlier this month, NYSE listed casual dining company Brinker International, which owns franchises like Chili's and Maggiano's, ringing the opening bell to celebrate its 35th year of listing. Judy Shaw sat down with CEO Kevin Hochman to discuss what's driving all of the success for both brands. Check it out.
We're on a pretty big turnaround right now, and we've had incredible success. We're just focused on the fundamentals of casual dining, which is craveable, great food with great service served in a clean and friendly atmosphere. And those fundamentals aren't that sexy, but they have a really sexy result. So we've been on this journey for almost 3 years now, focusing on those strategic pillars. It's clearly resonating with the guests, and we posted traffic of plus 14% last quarter, and we just have a lot of momentum right now in the business.
And how are you standing apart from your competitors? It's a pretty crowded space.
Chili's is a very differentiated brand. So next year will actually be Chili's 50th year anniversary of being in existence. And Chili's has always been a grill and bar concept that's very distinctive. We introduced fajitas to America. We're the #1 seller of margaritas in the country. We've got things like Southwest egg rolls. So these are signature items that we're really known for that really separate us in the grill and the bar space. And then obviously we have something called Chili Head Hospitality, which is our team members love to serve each other. They love to serve the guests, and they love to have fun doing it, and they love not to take themselves too seriously. And Chili Head Hospitality is one of the reasons why we've been around 50 years, and we'll be around for another 50.
Now, what shifts have you observed in dining preferences, and how is Chili's capitalizing on them?
I think people are making a lot of hey, everybody wants to order digitally and they want to eat off premise. The reality is that stuff really doesn't change that much. People, when they go out, they just want some of the basics. They want to spend an hour with friends and family in a nice, comfortable setting. They want to make sure everybody feels included, and they want to have great food with great service. And that's what we're focused on right now. We continue to win with that formula. And quite frankly, why people go out, that has not changed over the years. As long as we stay focused on that, we're going to continue to win.
And what new changes can your guests expect to see on the Chili's menu?
Well, it's an exciting time. So we have this thing called the Core Four. These are items that now make up about 50% of our business. So chicken tenders, which we call chicken crispers, margaritas, fajitas, and hamburgers. We've been, since kind of the resurgence of Chili's, been focused on those 4 things. By the end of Q4 this year, so by the end of June of 2025, we'll have done all 4 of those over again. So we have lots of innovation, made the core really great. And now we're going to start working on the rest of our menus, things like steaks and ribs and appetizers. So there's a lot more changes ahead of us than there is behind of us, which is exciting because we've already had incredible growth in the stock.
Kevin, the Triple Dipper, it's gone viral. So what's the story behind this popularity?
So we've always had a triple dipper on the menu for years, right? The reality is it's the way young people love to eat. You can choose from lots of little appetizers, so they're kind of smaller versions than the full-size version. You can pick 3 of them, and then you get 3 different dipping sauces, and then you can kind of have fun and play with your food. And so what we found is we did a TikTok campaign. This is back in March. We've been continuing to do it now for 9 months, just showing young people how to use the triple dipper, the kind of fun they can have with it. And there's this thing called this mozzarella cheese pull that people are doing all over TikTok. We've seen millions of views of it, where they bite the mozzarella cheese and it goes, and they try to make it as far as they can make it, right? And that's really traveled really far. And right now we talked about the triple dippers are up 80%. We talked about this in our last earnings call. It's driving a lot of the growth that we're seeing right now, and we're introducing a whole other generation to Chili, so it's really exciting for everybody.
Now let's switch gears. You have another Brinker brand, Maggiano's, which has experienced some changes. So talk about the evolution of that brand.
It's an amazing brand. It's completely different than Chili's. So it's an Italian brand. We call it Maggiano's, and it's run by Dominica Bertoloni. And he came in from MGM. He ran their restaurants and their hotels. He's coming up on his 1-year anniversary, and Dom's vision is how do we continue to elevate that Maggiano's brand. So it's rooted in classic Italian-American cuisine, and you typically go there when you want to have a great time with friends and family over amazing food. And Dom is elevating the food, he's elevating the service, and there's some really exciting things ahead of us. I'll give you some examples. He now has a tableside Caesar that comes out using this amazing new recipe that we have. He's got a spicy rigatoni that has quickly shot up in terms of the menu mix. So there's so many exciting things. And then even on drinks, he's introduced a smoking old fashioned. It comes out in a little bird cage. Smoke comes out of the little cage. It's become our #1 drink, and it's reversed a 10-year decline of alcohol mix at the brand. So there's super exciting things happening at Maggiano's. It's kind of going through the same paces as the Chili's turnaround. It's in year 1 of its turnaround, and we expect great things from that brand too.
All right, and finally, Kevin, what are your key priorities for Brinker International over the next year, and how will you define success in 2025?
Yeah, so it's just staying focused on the fundamentals. Our stock is quadrupled since I started, and my biggest fear with our organization is getting bored of the fundamentals, because the fundamentals have made incredible progress on our market cap and the success that we've had with guests. And guess what? Fundamentals will continue that success going forward, and so that's what we're going to be focused on. We've got great new food things coming up. We have great new service initiatives coming up. And then we've got a whole project on reimaging our entire estate that's going to get started next year. So once again, focus on the fundamentals and good things will happen for your business.
Well, I don't know about you, Kevin, but I'm getting hungry. So it's wonderful to have you on Floor Talk. Thanks for joining me today.
Oh my goodness. Thank you so much for having us. And next time I'm on, I'm going to bring food from both brands, and we're going to pig out. So
yes, we are.
Don't go anywhere. We've got a live opening here at the New York Stock Exchange of the opening bell. That's coming up next.
I do want to talk to you about space investments right now are really flowing into startups. From an investment standpoint, talk to me about how the current economic climate we're in could impact the sector.
It's been a few difficult years in the capital markets, but things are starting to turn around. I think the Fed's decision to take interest rates down, 50 basis points cuts, certainly impacting the public markets. It takes a little while for that to flow through to the private markets, but we are starting to feel some optimism, and there's a lot of reasons to feel optimistic when the last couple of years have been pretty uninspiring. So it's a good time just generally in the capital markets. Capital continues to flow. Innovation has continued to push forward in the space economy. And we're seeing not just, SpaceX and the big names, we're also seeing other new companies come up, make names for themselves, and raise significant capital to go out and execute their plans. Every quarter we produce our Space IQ, Space Investment Quarterly, talking about the flows of capital, startup activity, and investment trends in the space economy. We just published our Q3 report. We're showing $330 billion invested since SpaceX came online into 2,000 unique space companies.
Talk to me more about those key takeaways that you found in your Q3 report.
A few of the big ones, right, is that SpaceX has gone from underdog to apex player, right? They were tapped by NASA to go and rescue the NASA astronauts that were stranded on the International Space Station by Boeing. A big quarter for SpaceX. And they haven't had to tap the capital markets since 2022. They've raised a lot of capital, so the investment dollars have been strong in part due to SpaceX and going out and raising capital for what they're building. Now they're fueling their growth with revenue. So there's a big gap in the investment data that other companies are now starting to step up and fill. AI and geospatial intelligence data. So applying AI to data from space. We have way too much data coming in from orbit. We have decades of archived data. It's way too much for humans to get their arms around unless you
Welcome back. I'm Allison Cossack. Before Boston College and Nebraska get into the Pinstripe Bowl at Yankee Stadium tomorrow, Saturday, they are going to be ringing today's opening bell here at the NYSE. But first, let's dig into the playbook, shall we? Bad Boy Mowers will be the game's title sponsor for the third straight season. The company has been expanding its footprint across college sports in recent years. It also sponsors the battle for Atlanta's early season college basketball tournament. All right, there we go. Let's take a look at the opening bell. And that was a live look at the opening bell here at the New York Stock Exchange. Bad Boy Mowers, once again, is the game's title sponsor for the third straight season. The Pinstripe Bowl, by the way, has been played annually since the year 2010, except for 2020 during the coronavirus pandemic. While this is Nebraska's first appearance in the game, it will be Boston College's third previously competing at Yankee Stadium in 2014 and 2017. All right, let's move on. And joining me now again is Jay Woods. He's the Chief Global Strategist at Freedom Capital Markets. He joins us once again. I'm glad you're back because I want to get into a couple of other topics. Also, the Fed we'll get to. First, we're looking at 2025, and I think AI is still the story. But what will investors really be looking for when it comes to AI?
Well, they want to see exactly where AI takes us. It's another industry. Reminds me of the 90s, for us older folk, and the internet invention and what kind of economy that created. It's going to enhance a lot of the biggest big cap stocks like an Apple, artificial intelligence, AI, Apple Intelligence. That's slowly being incorporated into the phone. If you watched Netflix yesterday and you saw the football game, there was a lot of Google ads for Gemini. That's their AI enhancement. So to me, it's going to be implementation of AI, how it becomes a fabric of our lives, so to speak, and that will basically bode well for the mega caps that are already implemented. And then you have to dig deeper and research some of those smaller cap stocks that are behind that implementation. And there are a few on the sidelines that could go public here at the New York Stock Exchange later in the year. We'll see, like ChatGPT, not public. Perplexity AI, not public. So there's a lot coming in that story, and I think that will still be the story for 2025.
So we're wondering if small caps is going to be the story as well, because given that interest rates moving lower, small caps are expected to perform better next year after they've underperformed the broader market in 2024. Do you agree with that?
Now, small caps are the most frustrating sector in the world to trade. Ask any trader down here. When they go quickly. We had a 9% rally in the beginning of July. Last year, between October 23rd and December 23rd, they were up 20%. It could never sustain. Right now, with rates being where they are, it's going to be tough for them to really lead. Will they do well? Yes, I think they'll be okay. We're seeing earnings growth in the small caps, but what we're not seeing is an accommodative Fed, interest rates that have been stable and stayed a little longer, and we never got back down under 4. We'll see where it goes, but right now I think large cap, mid cap growth is where the story's going to be. Small caps, we're going to have to just kind of pick the gems out of there, and that's the hardest thing to do.
Is the sort of the feeling that we're getting in the markets now that there's this uncertainty with the Fed, and that's creating the volatility in the markets because we don't really know which way the Fed's going to go?
Yeah, I mean, the Fed is always where we focus on everything first, and then we go from there. And then what does the Fed focus on? Inflation, unemployment. So the volatility goes to the uncertainty of the Fed. We had 2 dissenters over the last 3 meetings. You don't see that happen very often when the Fed meets. And then Jerome Powell at the last meeting was a little wishy-washy. We could have cut, we could have kept them the same way. And then the dot plot was a little, it was a very hawkish cut, and that got the market confused. So you ask about volatility, that caused a lot right then and there. Since then, haven't seen much Fed speak, but Fed speak will pick up first full week of January. And yes, I think the volatility will ensue as well.
I'm curious if you think the Fed made mistakes in this rate cutting journey, that maybe it came out too strong with the 50 basis points at first and now kind of pulling back. It seems like it's either one way or the other,
don't
right?
get me started on the mistakes they made. They didn't raise them fast enough. They were slow to do that, so they were behind the curve when we started the hiking cycle, and then it had to be the fastest rate hike in the history of rate hikes. And then the cut. When we had that cut back in September, we cut 50 basis points. The meeting before that was in July. 2 days after the meeting, the unemployment number came out. They decided not to cut. Everyone thought, okay, 25 basis point cut would be in line. Okay, the data's showing that. And then unemployment spiked up and then people panicked. Then we had volatility. August 5th, the Japan yen carry trade on top of the Fed not cutting, and we saw a lot of volatility. So they should have cut back in July. They didn't. They overcut going 50 to make up for the mistake they had in July. And then this last one, all right, we're cooling down. We talked in the last segment, sticky and stubborn inflation. Yeah, inflation has not ticked down since they started raising rates. Okay, unemployment has stayed flat. It's stabilized. That's good. But why did we need one more cut? Why don't we just let things digest and then we'll go data point at a time, like Powell likes to say?
Are you concerned that there is this uncertainty that the Fed is creating?
Yeah, I mean, definitely. And you put that with the new presidency and a president that likes to kind of put pressure on the Fed to lower rates, yet he's raising tariffs, which are inflationary. So there's going to be a lot of headlines made. Now, we went through a Trump presidency before, 2017. This was the crazy stat. 2017, we were up every month. Volatile headlines. But remember the election and the inauguration crowd, we're going to be talking about that in a few weeks too. But the headlines were volatile, the market survived. What derailed us last time was the beginning of 2018, kind of what I'm seeing now, was tariffs. And the uncertainty around the tariffs, with volatile headlines, with a Fed that seems to be, torn right now about their direction, it could lead to some anxiety.
Yeah.
Market doesn't like that, and we may sell off a little bit. It's okay. Not the end of the world.
All right, Jay Woods, thanks so much for your analysis. Appreciate you here on the show today. Chief Global Strategist at Freedom Capital Markets. Coming up, TikTok is heading to Capitol Hill in an effort to avoid a U.S. ban. An attorney tells us how likely the platform is to be successful. Speaking of social media platforms, Reddit joined the NYSE community when it IPO'd in March. Let's take a look back at that moment, and we'll be right back.
What an honor it is to be here with you and to see you all here. Not many people get to do something big in this world, and we get to do something truly special. Enjoy the moment. Let's celebrate it for what it is, an important milestone on this long journey. Thank you. It's truly an honor.
Reddit's going to be 19 this year. I think of us as a really young company. This is the beginning of that chapter. I just couldn't be more excited about it.
To the village here that made this possible, embrace the road to success. Let's do it.
My friends, your passion for our mission is just unshakable. And this is only a beginning of the sense of community that we'll bring to the rest of the world.
Today is about one word: community. When harnessed properly, communities unite to invoke change and equality. And I can't think of a company that is more emblematic of that statement than Reddit.
Sharon, always wonderful to see you. Welcome back to Floor Talk.
Thank you. I love being here, as you know.
Oh, love having you. So you're here today. You actually just reported your third quarter fiscal 2024 results. So tell me, what were some of the highlights?
Well, thank you. Yes, we did. I think the biggest highlight is that it was the best third quarter in the history of the company. So that's a strong highlight. We were up 11% on our revenue and up 26% on our pre-tax profit. So very strong quarter. And I do want to mention, though, that in our fourth quarter year to date, also good, but we saw some softness in our e-commerce business, so we did narrow the guidance a little bit, tweak it a little bit, but we're still expecting right now to end the year with the fourth consecutive year of record results on a rev perspective.
All right, so Sharon, talk about your long-term strategy and your goal to continue expanding globally.
Our founder, Maxine Clark, who started the company well over 25 years ago at this time. And by the way, this is our 20th year on the New York Stock Exchange. But she always said that a hug was understood in every language, particularly a teddy bear hug. And the experience is such an important part. It's the way so many of our guests and our customers often meet Build-A-Bear, if you will, for the first time, is to come in and make their own bears. So that piece of the puzzle is important. And those three new business models are corporately operated, but that's the model that we've always used, actually, and then partner operated, and then franchising. So it gives us a lot of latitude, and the latter two are more capital light, and that's what's allowing us to build out our store base. We have opened in 6 new countries in the last quarter, and we're now up to 20 countries, and we're going to have up to 600 stores by the end of this year, up from 500 just a few years ago.
Very exciting, yes. Very exciting. So tell me, are there any new partnerships you've had this year? Anything you want to share?
Welcome back to NYSE TV Live. I'm Allison Cossack. On January 10th, the Supreme Court will hear social media platform TikTok's appeal to avoid a U.S. ban, which is set to take effect on January 19th, one day before President-elect Trump takes office. Kristen Scholler spoke with Anthony Rappa, partner and co-chair of the International Trade Practice Group at Blank Rome, about what we could expect. Take a look.
Basically, the Supreme Court taking up this case really opens up some very interesting possibilities regarding the future of TikTok, which frankly may not have very long to last, depending on how things go. So as a very brief recap, in April, the president signed a law that essentially gave the president the authority to target foreign adversary-controlled applications. But the law went one step further. It called out TikTok by name as a foreign adversary-controlled application, and it gave TikTok 270 days to undergo a qualified divestiture to a company other than ByteDance or to investors other than Chinese-controlled investors. As it happens, 270 days lands on January 19th, the last day of the president's term. And this was challenged in the DC Court of Appeals and failed. But just last week, the Supreme Court stated that it would take the case. So, briefing is scheduled for that on January 10th.
Yes.
TikTok has asked the court to issue an injunction that would prolong that ban from going into effect, but it remains to be seen if the court will do that.
Interesting. So, Anthony, in terms of how this could play out, what are the chances you think that TikTok can successfully be divested and no ban is in place?
Well, there are some very significant challenges associated with that. Number one, and I think in many cases, a lot of people, especially in the law, should try to stay out of the prediction business. But it's going to be difficult to win this case at the Supreme Court, it seems, although the case does raise very important questions. But they're going to have an uphill battle at the court, first of all. And it really seems as if ByteDance is dead set against there being any kind of a divestiture. Now, number one, they've placed an astronomical valuation on the company. The last I saw, around $300 billion. The secret sauce that goes into that valuation is the algorithm, which is considered by the Chinese government to be a crown jewel. And even under Chinese law, it might require a Chinese governmental approval to allow that to happen, which for different reasons could be considered to be unlikely. So there are different scenarios, especially with an incoming administration that could have a different view as compared to this administration, but certainly a lot of challenges in front of the company as of this time.
What are the key issues or challenges here, Anthony, that you referenced earlier in this case?
So the main issue before the court is that this is a First Amendment issue. And in fact, there were various other issues raised in the lower court. The Supreme Court is only taking this case on First Amendment grounds. That's the only thing that the parties are being asked to brief. But there are a lot of moving parts here. So the ban is scheduled to come into effect on January 19th. The court is taking oral argument on January 10th. TikTok has asked that ban to basically be stayed while the court is evaluating the case. Nobody knows if they're going to do that. Recently, a couple of senators asked President Biden to issue an extension on this ban, but then there have been other senators, also on a bipartisan basis, that have asked the president to let the ban go into effect. And then President-elect Trump has had different things to say on TikTok. His ability to impact events and to prolong the ban is really not at all clear. He could, not to speculate too much, but he could choose not to enforce the ban, or he could choose not to hold companies accountable if they issue services to update or to maintain TikTok or provide hosting services for TikTok. But it's not clear that the app stores are going to want to go along with that, or that they're going to take comfort in being told that the law would not be enforced against them. So there are different things the president-elect could try. Not clear if the Supreme Court is going to stay the effective date of the ban. We may not know until June, depending on how this all unfolds.
Coming up, I'm heading to the trading floor to talk with the athletic directors of Boston College and Nebraska ahead of tomorrow's Pinstripe Bowl. One company that brought plenty of excitement to the trading floor was Rubrik when it IPO'd at the NYSE in April. Check it out.
All of you, you have been relentless on this mission to secure the world's data. Rubrik is not a startup or a company with an exit. Rubrik has no exit. Rubrik has no finish line. Rubrik is our collective ambition to see what we can do and how far it goes.
Starting up a company and then taking it to the success that it has become is not an easy job, but you all did it.
We'll do whatever it takes to make sure that Rubrik has the highest opportunity to achieve its greatest potential. Big day, big inflection. Go Rubrik!
So at DailyPay, we're really tackling the paycheck to paycheck cycle that so many people are living in. And we're doing that by a pretty simple concept, actually, disrupting the last thing that people wait for in life. If you think about the things that you wait for, right? You don't wait for your shows, you don't wait for food, you don't wait for a ride. Even if you're sick, you don't wait to see the doctor. You just get on telemedicine. But yet, people go to work every day and then wait 2 weeks or more to get paid. And it's creating this paycheck to paycheck cycle. So we are dismantling that by bringing earned wage access to people that can work and get paid in the same day.
And you actually work a lot with NYSE listed companies.
We do.
Talk to me about why you think your concept resonates so deeply with companies like Target and Kroger.
Well, companies like Target and Kroger, they see it is always incredibly difficult to hire and retain frontline workers, regardless of whether the economy is strong or whether we're in a weaker economy. It's always a challenge of really being able to retain great people on the front lines. And so they work with DailyPay because they've seen that when employees are using DailyPay, they stay longer. They're more engaged with their employer. And in fact, they feel like they're in a situation that's a win-win with their employer.
How is earned wage access impacting the overall employee experience?
Earned wage access is an incredible impact to the employee experience. In fact, our clients will tell us that it's the top adopted benefits across their workforce. And it's because it's something so simple, right? If you think about people are working to obviously have money to pay their bills. But those bills don't always come in 2-week increments. So it's very hard to plan life, even if you make a monthly budget. If your rent is due before your payday, right, that's not helpful.
Welcome back to NYSE TV Live. I'm Allison Cossack. Moments ago, Boston College and Nebraska rang the opening bell ahead of the Bad Boy Mowers Pinstripe Bowl. Joining me now is Troy Dannon. He's the athletic director at the University of Nebraska. So great to have you with us today. How significant is it for this program to be playing in its first bowl game since 2016?
Well, it's been a long drought for us, and to do it in the city, no better exposure, no wider exposure, any place we could play a game. Our coach being from the city, our president being from the city. So there's a lot of storylines for us to come back home for a lot of our people. That said, 90% of our athletes have never been to New York City before. So it's been a neat experience for them to see a lot of things and that maybe they'd only seen on TV before.
Yeah. What excites you most about the Pinstripe Bowl in particular?
Well, I think playing in the iconic Yankee Stadium. I mean, I'm 58 years old. I've been in New York City 25 times, but I've never been to Yankee Stadium. So getting to play the game in there, breaking our bowl drought, playing a program like Boston College where there's just great and immense respect between the coaches, history between the coaches, history between the athletic directors. So it's something everyone's been looking forward to since that Sunday early in December when it was announced we had the opportunity to come.
This is Matt Raiola's second season as Cornhuskers head coach. What is the biggest thing he's bringing to the program?
Well, Matt's built programs that weren't winning into winners in quick order at Temple and at Baylor, and now he's trying to do that again here at Nebraska. Nebraska's got a great history, a great brand value and brand equity, but we hadn't won for a while. So Matt's kind of that guy that's done exactly what Nebraska needed to have happen. Getting back to the bowl here in year 2 for him is the logical stepping stone to what we hope is a really bright and prosperous future for the program.
The NIL era is transforming college athletics, as you're seeing firsthand with freshman Dylan Raiola. What opportunities is name, image, and likeness presenting to Nebraska, and which one has the most storied programs in college football?
Well, for the guys to have the opportunity to financially benefit off their participation is something that's been long overdue. We're in the middle of this evolution, some call it a revolution, to where there's not a lot of governance, and so things are going all over the place. And I think once we get a good system in place, it'll be something that both the programs can benefit from, and certainly the athletes can benefit from. Right now, it's a little hectic, a little chaotic, but the fact is, the athletes have earned the opportunity to benefit, and so not just Dylan, but a lot of our guys, not only graduating college with no debt, which used to be the calling card for a scholarship. Now they're graduating college with basically a life-changing bank account from the day they start, and so better chances for them to not just survive, but really thrive moving forward.
Yeah, setting them up for success. Troy Dannon, athletic director at the University of Nebraska. Fantastic talking with you.
Thank you so much.
All right, let's go ahead and take a live look at the trading floor. And joining me now is Blake James, athletic director at Boston College. Thanks for being with us. I'm curious, what excites you most about being a part of the Pinstripe Bowl?
I think giving the young people in our football program the opportunity to play another football game, to put the uniform on, and in an area where you have just so many Boston College alumni and family, and obviously just a short drive down the road from Boston. So looking forward to having a great crowd out there and having our kids have another opportunity to play at an iconic place like Yankee Stadium.
This is head coach Bill O'Brien's first year as BC's head football coach. What is the biggest thing you think that he's bringing to the program?
He's just bringing a level of excellence. When you look at everywhere that Bill's been in his journey, he's achieved at the highest level. And so to have him leading our program is something I'm very excited about.
What else are you looking forward to?
Oh, being in New York is just great. To have the opportunity to be here for the holidays. We all came in on December 24th, and to be here through Christmas and to be able to be with our football families, I guess I'll say, and just enjoy the city has just been a real highlight. And the Pinstripe Bowl and the Yankees do such a great job in putting on a first-class experience.
BC's thriving in sports other than football as well. For example, your school has the #2 ranked men's hockey program. How are you preparing for a new revenue-sharing era?
You have to always be changing. When you look at college athletics over my time, 20-some years, it's constantly changed. This is another change. We'll continue to evolve. We'll do it consistent with what makes most sense for Boston College. But that's to compete at the highest level, not only academically, but athletically. We want to be out there winning our games and obviously developing young men and women for others, consistent with our Jesuit Catholic values.
All right, wonderful. Blake James, athletic director at Boston College. Fantastic talking with you. Thanks.
Great to be with you.
Okay. All right, let's take another live look at the trading floor. Okay, joining me now is Mark Holtzman. He is the director of the Bad Boy Mowers Pinstripe Bowl. Is that right?
Sounds good enough.
Okay, let's dig into this. You presided over the Pinstripe Bowl even before the first game was played in 2010. Talk me through what excites you most about this event.
Well, what excites me most is the enthusiasm that both schools show to want to play in this game. Because you're giving up Christmas week and New Year's when you want to be with your family, yet this game has developed such a reputation of doing such wonderful things during the week, not only for the players and the families, that all the schools in both conferences want to play in this game, and we don't have to sell it. They want to sell themselves to us to come to the game.
Yeah, and for those who are more, casual sports fans, what could you say is the biggest reason to tune into this year's game between Boston College and Nebraska?
Well, first of all, we have two historic franchises. I mean, Boston College, Nebraska are in the lore of college sports. I mean, Nebraska for years was one of the greatest football programs in sports, going to the Orange Bowl, playing for national championships every day. And Boston College is an institution in this area. So, I mean, they're two great schools, and it's going to be, a lot of people say it's going to be one of the best games of the year with two brands like that. So if you're a football fan, and it's a Saturday, and you're sitting home and everything, and with your family, what a better thing to do? Tune on at noon on ABC and watch the Bad Boy Mowers Pinstripe Bowl from Yankee Stadium.
Oh, yeah, absolutely. So while we find out who's playing in the Pinstripe Bowl only a few weeks ahead of the game itself, take our viewers through how long it takes to prepare for the event, throughout the year.
Well, it's a year-round, obligation, obviously. I mean, we have a baseball team that does play a few games at Yankee Stadium. So we don't convert the field itself. The field's a baseball field until hopefully every year till early November, and we make the World Series. And then we convert the field to a football stadium. But as far as promoting the game itself, we promote the game throughout the year. I mean, if you go to a Yankee game, you'll see promotions for the Bad Boy Mowers Pinstripe Bowl up on the boards. There'll be signage during the year. So it is a year-round commitment on our end and the Yankees' end to promote the game itself. I mean, the game itself on December 28th, on Saturday, is just a culmination. And it's just not a month or two. It's the culmination starting early in the year and then building up with a crescendo to the game itself at the end of the year.
You're working with other organizations, other companies to continue to bring more action to the Bronx, especially during the MLB offseason?
Yes, well, it's, once again, when you're a partner of the New York Yankees, you're a partner year-round. I mean, that's what these companies like when they're involved with us. They like the fact that we're so charitable, as with the Bad Boy Mowers Pinstripe Bowl itself, with Memorial Sloan Kettering and the local Red Cross. I mean, we always try and tie in partners, and also the Bronx youth. I mean, you're going to see a lot of youth football organizations at this game. So it's more than just a game for the sponsors. It's a game for the whole community.
It is. Mark Holtzman, thanks so much for your time. I look forward to watching.
Thank you.
All right. I'm Allison Kosick. Thanks for watching NYSE TV Live. Have a great day.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing. This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.